Despite Bitcoin's weekend rebound after falling below its 2017 high, investors remained on edge due to a barrage of negative crypto headlines and macro factors that are keeping pressure on sentiment. In today's video, we'll talk about Bitcoin's recent gains and the CEO of Circle's thoughts on the future of crypto regulation. Don't forget to subscribe to Crypto World. Either. For that reason, let's not waste any more time and get down to video. Bitcoin, the largest cryptocurrency by market cap, spent most of the day trading at or above $20,000. According to Coinmetrics, it has recently dropped by less than 1% to $20,054. Over the weekend, Bitcoin fell as low as $17,601.58. While the recovery is welcome news for Bitcoin's investors, the cryptocurrency is still trading at a 70% discount to its November high. This year, it has dropped by 57% so far. Crypto market analyst at Japanese Bitcoin exchange, Bitbank Yuya Hasudawa, believes Bitcoin still has more downside potential despite widespread optimism that the market has hit bottom. Bitcoin's weekend tip was, to put it simply, not deep enough, he said. The macro environment has not changed from last week's FOMC meeting. There still has not been a clear sign of inflation coming down, and the Fed may still drive the economy into recession by raising rates too aggressively or simply by failing to tame inflation. About the popular game, dead cat bounce. With Bitcoin unable to hold convincingly above $20,000, industry watchers said the rally might be short-lived. Vijay Iyer, Vice President of Corporate Development and International at crypto exchange Luno, told CNBC that unless the price of Bitcoin closes above $23,000 on a daily timeframe basis, the odds are this is a dead cat bounce. We're oversold, so a bounce was expected, he said, beginning with the demise of algorithmic stablecoin terrorist and its associated token Luna. The broader cryptocurrency market has been beset by many issues in recent weeks. The spotlight has shifted to cryptocurrency lending platforms that offer attractive returns on cryptocurrency deposits. Celsius, a company with 1.7 million customers and nearly $12 billion in crypto assets under management, temporarily halted withdrawals for customers last week, leading some to worry that it may be insolvent. Companies dealing with cryptocurrency have announced layoffs as a result of the current market situation. The cryptocurrency wallet and exchange Coinbase announced last week it will be laying off 18% of full-time employees. A lending firm called BlockFi said last week it will lay off a fifth of its staff. When inflation is on the doorstep and with rate hikes in the offing, the risks of a recession around the bend are high, said Charles Hader, CEO of Crypto Compare. The psychological bracing and paring back that is occurring as a result of higher rates draining cash from mortgaged house owners are harming digital assets. In addition to this, the recent retreat in the digital asset ecosystem has revealed many underlying systemic issues. Recession ends. As cryptocurrency prices have plummeted in recent weeks, some have speculated that the market may be nearing a bottom. Giles Keating, director of Bitcoin Swiss, told that we're close to a point where some of the real excess leverage has now been driven out of the system and a bottom can begin to be formed. Leverage is a term used to describe the practice of trading wherein the speculator effectively uses borrowed funds to effect a trade. That means smaller sums of money can buy a greater percentage of a stock or other investment. However, investors must keep enough cash on hand to meet the so-called margin requirements, making this form of trading risky. If they don't, their stake will be canceled without further action. The market is expected to react strongly to these liquidations. Although Keating acknowledged the possibility of further liquidation, he anticipated that the bulk of the sales was complete. And now Keating says, some people are warning that we are still not yet there, and that if we were to break significantly lower, that we'd see another wave of liquidations. That potential danger is always present. But my feeling, given I think those very big double-digit rebounds we saw in Bitcoin, particularly in Ether, I think to my mind that was a sign that a lot of those really big liquidations are now done, and that the base is being formed. Now further move on to this video, let's hear about what CEO Jeremy Allaire in an interview about crypto regulation. The reality is more nuanced than that. In my view, there are many segments of the political left and right that each have their unique take on this, and frankly, there's a lot of misunderstanding. One extreme liberal perspective holds that this is bad for people with less access to the financial system, although this is often the case. Stablecoins, a subset of this technology, show promise for democratizing access to the financial system to an even greater extent than the current banking system. On the other hand, large financial institutions and the lawmakers they can influence are arguing that stricter regulations are necessary for companies operating in this sector. Bitcoin and other cryptocurrency firms have arguably benefited from looser regulations than PayPal and Square. There are also moderates on the left and right who can see the positive side of this. Then he made a few remarks about stablecoins. Furthermore, what expectations does he have for their attitude toward cryptocurrency? And does he think they will expand it or regulate it more heavily? Given the importance of this infrastructure change compared to the advent of the commercial internet, I believe they will eventually come around to supporting it. And this is going to be an essential component of that. And he elaborated on the distinction between Bitcoin and stablecoins. A stablecoin, such as a USD coin or USDC, is a digital currency whose value is pegged to that of dollars held in the banking system. Thus, it is a new shape for dollars. As some have put it, it's a way to combine the safety of a dollar, held in a bank, regulated by the Federal Reserve, with the advantages of cryptocurrency, such as instantaneous, worldwide, and cost-free transfer, just like the way we exchange data, information, and content. In other words, by utilizing the blockchain, dollars and other fiat currencies are given a significant boost. Then he talks about how the Fed might issue its cryptocurrency that can be exchanged for dollars. Would that situation effectively eliminate the need for a stablecoin? There is currently a lot of interest in this topic, and a lot of research is being done around central bank digital currencies, from the Federal Reserve and the European Central Bank to central banks all over the world. Stablecoins are a new fundamental innovation in the way that money is transferred around the world, and leading companies in the private sector, whether they be crypto industry giants like Circle and Coinbase, or traditional financial institutions like Visa, or internet technology giants like Google and Microsoft, are currently racing ahead to implement them. The real question, I think, is whether or not there will be any convergence over the next 2, 3, or 4 years. Is there a sensible supervisory role? And do industry standards, fintech standards, and private sector standards converge with the safeguards that central banks care about? Thereon he talked about coins and digital currencies. Does he think could exist in a meaningful way 5 or 10 years from now? Because people right now look at Bitcoin as the holy grail of them. For the foreseeable future, I anticipate a widespread explosion of token-based digital assets. That was a mouthful, so let's break it down. Just as no one thought that everyone who could create content, a craft, a product, or their labor would be able to distribute it to every consumer in the world, no one thought that everyone who could distribute it would be able to create it in the first place. Online marketplaces have had a profound impact. They're responsible for the existence of these long tails. Nothing like that has ever happened before in the financial markets. One must, however, distinguish. You have cryptocurrencies like Bitcoin and Ether, which are completely digital. There are also issued assets that are backed by something else, such as a deposit at a reserve bank, shares of stock in a company, or a loan agreement. To that end, the most rapid growth is expected to occur in crypto assets that are representations of tangible assets like land. So yes, I anticipate a widespread introduction of digital assets into the marketplace. Is Bitcoin a good investment for 2023? What do you guys think about the cryptocurrency's recent upswing? Please share your thoughts with us in the comment space that has been provided below. And with that, I'll see you all tomorrow. If you enjoyed the video, that's fantastic. However, without your support, we won't be able to produce any more videos like this one. So if you want to see even more amazing content, please subscribe to our channel.